Welcome to Hdfc Mutual Fund. In this video, we will guide you on the process of initiating purchase transaction with Hdfc MFOnline investors. Registered investors need to log in on the website via password or OTP. Investors need to click on the Transact Now button on top right corner and select Purchase Transaction from the drop-down list. Investors can select folio from existing drop-down list. All the folios associated with investors' bank will be visible here. In case investor does not have an existing folio or wishes not to choose an existing folio, they can also create a new folio and transact. Investors need to choose whether they are investing with a distributor or investing directly. Choose yes to invest via distributor and choose no to proceed without a distributor. If investor selects distributor, then they will need to fill ARN code and EUIN number of the distributor. They can also proceed without EUIN by accepting the EUIN declaration. In the next step, investor needs to search the scheme they want to invest in. They can either type and choose from drop-down or select from the category-wise list available. After choosing the scheme, investor needs to type in the amount they want to invest. Please refer to scheme documents for minimum investment amounts and other information. Once all transaction details are filled in, the Proceed to Transact button will be activated to click and move to payment. Investor can review the transaction details and continue by clicking on Terms and Conditions checkbox and on Complete Transaction button. The final step of making a purchase is to choose payment mode. There are multiple payment modes available for the investor like net banking, NEFT or RTGS, OTM, HDFC fund transfer and UPI. Investor can choose their preferred payment mode. Kindly note that for payments via net banking, purchase transaction is available only via bank account registered in the selected folio. Further, the registered bank in the folio need to be third-party verification enabled banks to pay via net banking. Investor can check the list of enabled banks by clicking on Click Here, and this will open the list of TPV enabled banks available for net banking payments. Investors can select the bank of their choice from the drop-down list and continue the transaction. Second payment method is NEFT or RTGS. For NEFT or RTGS payments, investor needs to transfer funds from their bank to HDFC fund account beforehand to get the UTR number. Investor then needs to fill the bank details such as bank name, branch name, account number, IFSC code and UTR number. For bank details, please refer to our frequently asked questions. Another method of payment is one-time mandate, which needs to be registered with bank for this folio. Only existing OTMs will be available for payments. In this mode, investor can select the mandates registered via HDFC MF or CAMS COTM and initiate transaction. Fourth payment method is HDFC fund transfer, where investors need to fill in details such as HDFC MF scheme account number, account holder name, HDFC bank branch name and bank reference number. Here too, the fund transfer has to be done in advance to generate the transaction reference number. Fifth payment option is UPI, where investors need to just use their UPI ID and initiate transaction. If investors selects the net banking option, they will be taken to the selected bank's net banking page after clicking on declaration box and continue to pay button. After successful payment via net banking, the transaction details or account summary will be sent to the investor on their registered email address. Investor will also see a success message on screen with CAM's reference number for the transaction. And that is how, in a few easy steps, investors can start a new investment with HDFC Mutual Fund. This process of initiating transaction is the same on investors portal and app. Please visit us at www.investorweb.hdfcfund.com or download the app MFOnline Investors, available on both Google Play Store and App Store. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.